5 steps to invest your lump sum money or bulk money in the any which investments. Is it stock market, mutual funds, or any other thing you are going to learn in this video? Hi, hello, this is Ganesh Santuru, your stock market profit coach and author of the book One Page Mutual Fund, One Page Stock Market Plan. My next book is One Page Mutual Fund Plan, which is going to come shortly. And this video is all about 5 steps to invest your bulk money or investment, because this is a question asked by one of our client. And if you have any questions, please post it so that I will make a video on that as well, right? So the first and foremost step is how much money and when do you want to when do you want this money in the future? In meaning, so you are going to invest say 1 lakh. When do you need this money? Is it 5 years, 10 years, or 3 years, or 1 year? This is the most critical factor. Most of the people, they know this, they are going to invest. That is clear. But after suggesting all the ideas, stocks or mutual funds, they will come up with a point like, I need this money in 3 months timeline. That is where the point lies. That is the most interesting factor. So think about, when do you need this money? Is it 3 years, 5 years, right? Time period is very crucial. I'll share about what is that, why it is crucial in the next few minutes. Okay. And the second most important is, if it is short term, this is even more critical. Just give me a minute. When do you want this money? And investment is long term, and investment should always be for long term, because if you're thinking short term, you will not get appreciation. People are going for appreciation, like I think so many MLM multi-level marketing cheatings are happening. People are investing 50,000, they are getting double the money in 20 months time, and it's very highly dangerous. And you may invest 50,000, but how about investing 5 lakhs, and you will, by the end of the term, you will be fooled out. And how about some people will invest 10 lakhs, because you got your 50,000, you got your 5 lakhs, and when you invest 10 lakhs or more, that is when the person will cheat away. And that has happened repeatedly, irrespective of so many movies. This is keep on happening, and so many people are going after these kind of shortcut money making. It will never work. If it's your real estate, you will stay invested for minimum 10 to 20 years, right? If it is for your gold, you will not even think about selling it off unless it is your critical position. So think about investments as long term. But still, I know there are times like you need the money for short term, and you will be expecting better returns, like better than fixed deposits. In that case, along with taxation, say you want to have it for few months, like 3 months or 3 years, you can choose debt funds. Debt funds can be short term debt funds, long term gilt funds, short term gilt funds. There are n number of varieties based upon how many months or years you are going to stay invested. This is even more critical, because if you're choosing long-term gilt funds and if you're putting it for 1 year, you may be ending up negative returns or single digit 2% or 3% returns, because gilt funds will change the returns based upon so many conditions. You need to provide a minimum 4 to 7 years if it is long-term gilt funds, right? Even in debt funds, you can stay invested for long term. You will always get around 9 to 10% returns. And what about asset allocation funds? That is even more crucial, right? If it is for 3 to 4 years timeline, you can always go for balanced advantage fund or dynamic asset allocation fund. They are going to shift between debt and equity. So you will get the benefit of equity returns. Also, you will get the comfort of debt. So this is even a better choice if you are between 3 to 4 years or more than 2.5 3 years, right? That is the best choice. Okay. How about I said about mutual funds, because this is the place where you can preserve your capital as well as stay safe if you are somebody like that. And if you're somebody who wants to invest for long term, say 4 plus years or 5 plus years, go for direct equity, no one invest. And if it is equity mutual funds, it's very much clear. Choose a best fund and stick with it for till 5 years. It can be gilt funds, it can be asset allocation fund, it can be purely equity, either mid cap, small cap, or anything, right? And even index funds, you will get around 13-14% in 5 years time. So more than 5 years, go for sectoral funds. If it is close to 7 years or more, go for sectoral funds. All these are a little bit choices I'm giving it out right now, because how do you want to invest your lump sum? Say you want to invest 5 lakhs, go for long term, right? This is one of the best choice you can do. And another best point is looking at investing in stocks directly. Say you want to, you need this money only after 5 years. Choose stocks wisely, and 5 years is a very good timeline to make more money in stock market and create wealth as well. So, but only point I want to make it is, invest only when you know about stock market, only when you know to analyze a company, and then you can do. I am doing a webinar on stock market. You can join in and learn how to do this kind of things, and then you can go for investment, right? So this is something crucial when it comes to equity. People believe in their friends, relatives, but not on themselves, and that is where the problem lies in. So this is something you can focus upon, direct equity only when you know about it. And there is something a last option which I want to say, which is like putting your money in mutual funds and doing STP, systematic transfer plan. This systematic transfer plan, how it works is that you will be putting your hard-earned lump sum investment in a in a debt fund. From this debt fund, money will slowly transfer, get into the equities. For example, you will put your 1 lakh in debt fund, say ultra short-term fund. That will start giving you returns 3% or 4% or 5%, depending upon market condition, right? And from this fund, you will be transferring into the equity, maybe 10,000 per month for 10 months, and you can transfer from Axis ultra short term fund to Axis small cap fund, because right now small cap is very high, or even into Axis mid cap fund or Axis global innovation fund or fund. And you by this way you are going to reduce the risk. From this debt fund you are transferring for 10 months, and at every month there the NAV will go up and down. So the rupee cost averaging, you will be getting the benefit. And if you are very much doubtful, you can even take it away, take it extended for 20 months. 5,000 per month for 20 months. So 1 lakh per month, 1 lakh total investments in 20 months. Say you are going to invest 50,000, 5 lakhs, then you increase the amount. So it can be 25,000 per month, and maybe in 20 months you can do it, or 50,000 per month for 10 months. So you can, this is more than enough. And any in this kind of investments, you should for sure stay invested in equity for 4 to 5 years. If it is a lump sum investment or SIP, any equity investment 4 to 5 years, or else don't ever try to come into equity itself. Keep this point in clear. Keep this point in mind. 5 steps to invest lump sum amount. The first step is, when do you want this money, and the second step is it a short term or long term, and why it is long term, and all this should be very much clear. So this is even more very much important points to invest in stock market, or classify whether you want to invest in mutual funds or stock market, right? So these are the first point is, when do you want this money. Second point is, investment should always be long term, keep that in mind. Third point is, if it is short term, choose debt funds, which is very much clear. Debt funds or short term debt funds or ultra short term funds. If it is long term, how long it is, and how long it is in the sense, if it is more than 4 to 5 years, go for equity mutual funds. And if it is even more than that, 7 years, sectoral equity funds, which will give you better returns. And if you want to direct equity, that is the last choice you can go for, because direct equity no one invests, or else don't invest into direct equity. So 5 steps you can choose. And the last more bonus point I want to share is STP, systematic transfer plan, where you will put your money in a debt fund and transfer it into equity in equal installments. That just like reducing the risk of equity and transferring it from debt to equity. This is one more option you can look at. So almost like sixth step I shared, which is the bonus. You can look at investing a lump sum amount in stock, in mutual funds or stock market. Choosing the product is very, it's up to you, because wherever you're comfortable, go for it, and returns you will get it. Anything about 12% is a very good returns. And if it is stock market, only when you know and do it, or else don't do it. Because how about losing 1 lakh, and how about getting returns of 20% compounded for 4 years? That is what it will make a create a difference. Whichever you are comfortable, go for it. Thank you so much for watching. Please share this video with your friends.